The thing that gets me fired up the most and the message I want more people to hear is, we talked a lot about if you're feeling like you have those handcuffs on and you feeling like, there's more to life, you can do it. You can go after it, right? You can, even though it's going to be scary and there's going to be fear in the way, you can do it, right? And I want more people to step up and take control of their life and live intentionally and decide, what do I want? And then go after it, because it's totally possible.
All right, Michael Bugg, how are you doing today, my brother? Mike, how are things?
They're great, Russell. It's great to see you.
Yes.
I kind of messed up the scheduling after the time change, so you caught me out running, and so I ran back home to jump on and catch up with you.
Well, yeah, you're just Mr. Ironman fitness guy here, aren't you, Mike? So first of all, your goal, what was your goal for 2021? Was it 5 kilometers in certain, or 10 kilometers in a certain time? What was the goal?
The goal is to run a 10-kilometer race in under 40 minutes.
Under 40 minutes. Okay. How are you?
Yes.
Are you getting close to it now?
Oh, no, is the answer. I mean, I have put a lot of effort in. I took a crack at it in December and I was like 57 minutes, like way away. I haven't officially ran a race pace 10K. I ran a 5K the other day, and if you extrapolate the numbers, I'd be around 47 minutes. So I've made lots of progress, but that was kind of the easy progress. This last, like shaving 7 more minutes off, it's going to take a lot of work.
Yeah, it's always the last 10 percentile, which is probably the most difficult to do. But it is where it separates the prairie saying here, it separates the wheat from the chaff, if you will.
Yeah, I had set the end of May is the Sask Marathon. That's when I was going to, well, I'm still going to take a crack at it, but my confidence is waning that I'm going to hit that. So I'm going to have to bump the timeline out, I think. But that was the point of this, was set something that was really, really hard to accomplish. So,
and you're getting closer, aren't you there? Right?
Yeah. So, yeah. And I mean, or sorry.
No, go ahead, please.
Well, I was going to say, like, honestly, when I set that goal, the whole intention was, who do you have to become to hit this goal, right? Like, I don't really care about my time running. I care about the fact that it gets me out of the house. I have to get outside. I have to train. My nutrition has to be on point. Rosalie and Riley come with me on my Sunday runs down by the river. So that's what it's about. So I honestly don't care if it takes longer, because I'm enjoying that.
Wow, what a great question. Who do you need to become in the process in order to accomplish something? Sounds familiar almost there, my brother.
Yeah, it maybe has a ring to it.
So actually, Mike, I have an entire long list of questions here for you. I'm well prepared, and I know I never gave the questions to you, so sometimes the off the cuff is the best. But the most important question I'm going to ask you, this is the most important question, is how is Rosalie and Riley doing?
Oh, that's a good question. They're doing well. Riley is growing like crazy. It is so fun. She's just past 18 months old, so we're playing outside all the time. Rosalie's also doing well, finding her stride again. I can't fully understand, being a man and kind of giving birth to a child and going through and raising them, and running a business. So, I mean, it's amazing watching her. Like the stuff she accomplishes is truly remarkable. And seeing her grow, her business is growing. So yeah, she's doing well.
Yeah, it's I often joke an awful lot, as if it was up to men to give birth to our species would have died a long time ago. Where men are mostly by and large pretty wimpy when it comes to those kind of things. So
I agree.
Good. Well, give them both a big hug and a kiss from Corrine and us. I know one of her favorite books was one of the ones that Corrine picked up. Do you guys still read that to her every so often?
She's like, she wants to read like 5 to 10 books a night. It is nuts. Like, it's awesome. So it's in the mix, but we fire through like the whole pile almost every night.
Very good. Well, that's the most important. So we can just, mic drop. We're done. Podcast episode done. Okay. But I imagine the listeners are probably just saying, well, oh, come on, Russ, you just start. We haven't even guys got started. So Michael Bugg, you are a 3-time offender on my podcast. And only because you offer such a tremendous amount of value. And I have some cool topics I want to jump into here today. So topic number 1. So you're a 3-time offender. Guys, if you are on my podcast or watching on the YouTube channel, I made sure I wrote them down. Episode 11 and episode 42 are the 2 other episodes that Mike was on. Now, interesting to note, episode 42 was recorded before episode 11. And if you're a follower of my podcast, you'll understand why it came out in different order. But on those 2 topics, so if you're interested in getting a little bit more of the backstory about who Mike is, you can check those out. But before I ask the first question about the Hopkins deal that we talked in episode 11 and 42, maybe give people a quick snapshot of who Michael Bugg is and what you're all about, maybe some of the vitals and some of the top line details.
Okay. I'll keep it really short. I would say I'm a full-time real estate investor. My focus in that area is like lifestyle design, right? I look at how does real estate fit in my life. I am a veterinarian, although I'm not currently practicing. And in my time with you, Russell, that was when I had transitioned out of practice. And we were chatting before this, and I guess we're 3 years since I officially left my day job. A husband, dad, those are the current priorities and the most fun. Yeah. But yeah, that's what I spend my time doing.
Well, it was interesting to note is you and I hadn't connected for a while. And I was sitting there and I was on my way to a Costco trip. And I'm sitting there in the parking lot and Mike and I were just connecting. It was probably 2 weeks ago. And I was that guy in the Costco parking lots in a prime parking spot that was sitting there for like a half an hour. And everybody was coming up behind me, sitting there giving me the evil eye about when I was going to leave. And I finally just said, Mike, we need to wrap up this conversation before I get killed. Yeah. Because people want this parking spot.
That's as bad as the people that walk in Costco and stop to put their Costco card away. And it's like, oh, just get out of the way.
Yeah, absolutely. But the point of the story was, you were just sharing with me all the things that were going on. And I'm just going, man, if we just need to turn on the cameras and record this because there's a lot of cool stuff that's going on in your life and some transactions and just some amazing things. Okay. So here's what we're going to transfer into. Question number 1. So if you go back and you check out my podcast, episode 11 and episode 42, you'll hear Mike talk about a vendor take back or talk about purchasing an apartment building. And that deal was Hopkins on Hopkins Avenue. Is it Avenue or Street? Saskatoon.
Street.
Hopkins Street. Okay. Now, what we're going to do here today is we're actually going to tell the next chapter of that story. So you've bought the place, you had a vendor take back, and now you've gone through the refinance process. Talk to me about where Hopkins is now sitting at for this story.
Okay, so I would consider Hopkins now a stabilized asset in our portfolio. So we've refinanced it. We went through CMHC financing. So we have really good loan terms, long-term financing in place. It is full, it's fully renovated, it's fully occupied. There are some minor tweaks we can make to the building, both in trying to increase revenue and in decreasing expenses, like from operational efficiency. But I would say like we're 95% of the way like stabilized. And so now it just drops into the long-term holding portfolio. And the plan is to, just keep it humming along.
Nice. So in Ron Popeil, you know the term Ron Popeil? If you know who Ron Popeil is?
No, I don't know this.
If I said this term, set it and forget it, you would probably know what that is.
I know set it and forget it.
So Ron Popeil is an old infomercial guy, and he was the person that invented that with that rotisseries, the set it and forget it, right? So you're now in probably the set it and forget it a little bit path, right?
Yeah, and just to kind of play off that, set it and forget it as a real estate investor. I know we all dream of passive, right? Like money just comes into our account and someone's doing the work, but it's not us. I am definitely finding, even with third-party property management in place, you cannot set it and forget it, right? Like, I don't have to go show the place. I'm not the one advertising and showing tenants, but I need to keep an eye on the statements. And to be completely honest, I had slacked off a bit there, right? There's so much going on. I handed the property portfolio off and lost track of some of the statements. And now when you come back to it, it's like, wait a minute, we can tighten our operations, in different expense categories. And what I'm in the Saskatoon market, you really need to do that, because we've had the last 5 years very similar to Alberta. Revenue has dropped, like rents dropped, but expenses didn't, right? Property taxes were rising, the cost of water, the cost of natural gas, those things have been increasing. So your margin has been tightening.
Yeah.
Right. We're starting to come out of that, right? Rents are turning the corner. They're starting to come up. But I need to look at how can we get more efficient on the expense side.
Nice. So maybe we'll have to create a new term as set it and forget it, but keep your eyes on it, if you will. Keep your finger on the pulse, if you will. Right. So Great distinction. And guys, that's a huge lesson for a lot of people, because a lot of people get into real estate investing and they buy something. It's even turnkey. They got a manager. They take their eye off the ball. And I'm pointing at myself right now, looking in a mirror. I've done that myself. Is you obfuscate. You don't have your full responsibility of keep managing the asset. You need to keep managing the asset even after it is stabilized and after you go forward. As a matter of fact, a lot of people say your job has just begun, to be honest, once you actually got it stabilized.
Yeah.
Okay.
And sorry,
go ahead.
Rosie and I were diving into this, like not just in real estate, all areas of business, personal life. And we were talking about this just on, I think, Monday night, lying in bed. And the further, I know, pillow talk, hey? Pillow talk. The further you let that gap grow, the harder it is to close it. Like when you have frustrations in your life. So it's kind of that gap between expectations and reality. Yeah. Right. And you need communication to close that gap and keep it tight before it gets wide.
Yeah. And I know a lot of probably married couples are probably chuckling a little bit about that, is sometimes that's the chance that you get to have is the conversations with your significant other is after everybody's gone to bed and you're just kind of sitting there on the pillow and you're just kind of, got something to talk to you about. Right. Not that I've had that before. Okay. So back to Hopkins. So some quick diagnostics if people have not went to episode 11 and 42. What did you acquire that property for? How many units?
It's 11 units. You're testing my memory because they all blend together. It was a touch under $1 million. It was $975, I think, was purchase price for 11 units. So it was 89 something a door.
Okay. 89 and change a door. How many of the units when you took it over had tenants in it?
I think 4. Don't exactly quote me. It was 3 or 4, and I think one of them wasn't paying. So 3 paying tenants.
3 paying tenants. So you had a motivated potential seller. But interesting to note, he was motivated, but he wasn't motivated at the same time because it was free and clear, and he was still quote unquote cash flowing. So did that give you a realization of the power of having a free and clear asset?
Well, yes. I mean, the ability to survive in real estate, if you have a free and clear asset, like you can ride out, like this 5 years in Saskatoon market has been tough, and for the people that are free and clear or at least not highly levered, you have more staying power, to stay in the game and keep paying the bills.
And if we had anybody on Ontario on the line that maybe is listening, cash flow is the great equalizer that can absorb the ups and the downs and the sidewayses and stuff like that. And don't get me wrong, we're all in this to buy low, sell high and have speculation. But if you don't have the cash flow, you can't survive. Doesn't matter how high the price goes to. If you can't survive of the owning phase, it doesn't matter. You would just not ever realize that equity gain, will you?
Yeah. And I mean, I have to thank you, Russell, for that, because you coached me through that a lot, like thinking of the downside Because it's easy to be like, I'm going to lever this as high as it can. And real estate always goes up. And it's like, no, it doesn't. Not always.
Yeah. And my coaching, what was my coaching a little bit is, Mike, I've made a lot of mistakes. Don't do what I've done. And here's the mistakes I've made. So whatever I'm telling you I did, do the opposite. That was it was almost, I call it the Costanza model, right? The George Costanza, where you just do the opposite of what, So anyways.
Russell don't do list. Yeah.
Yeah, exactly. So, or what's the old joke one of my early mentors told me is, sometimes you're put here to serve as a warning to others. I digress, but I actually have done a few good things too in my days, Mike. A few.
Yes,
they're few and far between sometimes. Okay, so Hopkins. Thank you. Hopkins, just under $1 million. You had a substantial vendor take back on that property. You then got a good friend of yours with Spruce Homes, Brad Blair. I'm not sure Brad's a subscriber here, but he probably should be. He did a lot of the work. Talk to me about the renovation process and then the refi process.
Yeah, so the renovation process, this was an interesting one because I think about 5 of the units or 6 of the units were demoed. The owner had ripped out the bathrooms, done a lot of the demo work, bought the materials, right? There was new flooring sitting there. There was toilets, there was showers, there was vanities, but he didn't put any of it back together. So when we bought the building, we needed someone to go through and kind of quickly get the units put back together so we could get them rented. And that's where Brad came in. They did a great job, like very fast, very efficient. We kind of got to just knock through it. And this was right when COVID was coming on the scene. So we bought this building. I think we got possession in October 2019, and renovations were going, and we finished them February, March of 2018 when we bought it. February, March is when we finished, right as COVID was starting. So luckily we got out of there in time. I fear COVID would have really slowed renovations down, right? Just with people and traffic through the building. But we got it done.
Nice. And then the process after that was the refi process. So talk to me about, and you went CMHC standard, not standard, you had CMHC financing on an apartment building. Talk to me about that process.
Yeah. So this, for full disclosure, this was my first time going through the process of CMHC financing. So I had talked to lots of people and I had an idea of what to expect, but I've never experienced it. So I used a broker. So what a broker does is they've done this hundreds of times. They basically hold your hand and say, like, these are all the documents we need. You just get them to us. We'll compile your application for you and make your case to CMHC. Then we'll shop the loan around and get you the best rate. So that made my life easier. That does come with a fee to have a broker do that. The process, the sort of shocking parts to me was it took a long time. I don't remember exactly, but I think it was at least 6 months. And I do know there was some things that slowed that down in there, like COVID related. But yeah, so at least 6 months timeline. And it was more expensive than I thought from a fee standpoint, right? So you have your broker fee. We went up to an 85% loan to value on this building, which was our choice. And I knew they charge, I think it's 4.5% fee. That doesn't come out of pocket, but it tacks onto the back end of your mortgage, right? So it's still there. We had already done the phase 1 environmental, the building inspection. And more recently, they now require appraisals also for a unit or a building of this size. We were before that, so we didn't have that expense. But the expenses add up pretty quickly.
Yeah, it's what's the old joke in the multifamily world. Everybody has their hand out. And when you're talking handout, meaning everybody needs to get paid, which is great. You're happy to do it, but everything you almost add a zero to it with the cost of it. Environmentals, appraisals, inspections. You're not just talking 1,500. You're talking potentially a lot larger than that number, right? Okay, so if I remember correctly, so it was just around let's call it $1 million for the acquisition, and you had a vendor take back. I think it was about 7.25, give or take.
Yeah, Yeah,
And then you had
725.
a partner that came in with the remainder. What was the partner in? Was it about 400 and change, or what was the?
They came about 300, give or take.
Okay. And then what about the renovation costs?
They were about 40,000, maybe 45, to do everything.
That's it? Wow.
Yes, because our purchase price included all materials on the premises, right? So we, like, in our purchase price, I also bought a bunch of showers and toilets and vanities and flooring.
Yeah.
Right? Like everything that was laying around, that all came with it.
Okay, nice. Okay, so then you've refinanced and you went up to 85% loan to value of the new asset valuation, and the new asset valuation was based upon the new rents that your new NOI. How much was the new mortgage that you got?
So the loan value was 972, but then remember they go and they tack on that 4.5%. But on that loan value, 85% loan to value, CMHC valued the building at about 1.14 with some change on that.
Okay, so of the 972, sorry, I'm trying not to make math too difficult because math ain't my strong suit. So you got, what did you net get back after the refi? Like, because you had to then pay out the vendor take back, and then you were able to probably repay some of the investor capital at the same time. Is that correct?
Yeah. Yeah, we got about 210 back.
210. Okay. So if I'm doing my math correct, so your investor is only into this potentially for like $90,000, give or take?
Yeah. And I mean, that's their choice. Where we're at right now is we're just discussing, what's the next step. And certainly if they want that back and go do whatever they want to do, that's cool. Or we may just roll forward and try find the next deal.
Right. Nice. Well, I just ran a real quick calculation. So technically you're only into the property for like 7 or 8% of a down payment, give or take, into the new asset valuation.
Yeah, I was really hoping it was going to be like a perfect burr, right? Yeah. That's honestly what I was hoping for. The valuation came in a touch lighter than I thought it would. I think maybe they were a touch conservative because it was all the COVID fear. At the end of the day, I'm really happy with the building because it is a concrete building, good location. It's going to be a really strong long-term asset. Yeah.
All right. So is it how now? Remember when you bought it, it was, more than half empty, and now it's all full. How's it performing? And I would imagine you got a really nice interest rate on your mortgage too.
Yeah, our interest rate was 1.82. So we didn't hit the bottom, right? Like if we were timed it a little bit better, I think I heard of some even at like 1.6, but I'm not going to complain about 1.82.
So what kind of ballpark cash flow are you getting out of that 11 unit property right now per month?
It's around, and this is a rough number, it's around the 1,500 cash flow mark. So I think we're sitting like 125, 150 a unit. I do anticipate that's going to improve because we're just starting to see rents in this asset class starting to turn. Yep. So I think we're going to be able to start raising rents. Like I said, our expenses have all gone up. But so once we can start to raise our rents, that is going to be like straight profit, right?
Yeah. Well, here's the thing is, cash flow isn't great yet, but you're just now starting to operation increase cash flow, but you're into it for almost next to nothing. You've got a great long-term asset. All the renovations are done. Now you're just going to start optimizing cash flow. And that number will start slowly creeping up from say 125 to 150 a door to potentially 200 a door within a year or two. Nice. Congratulations, Mike. That's an awesome deal.
Yeah, it's a good one. I'm really happy with it. If these just felt like if I could find these all the time, I would do them over and over and over.
All right. So what are you doing, Mike, to be able to get more of these? Were you in our conversation? I was actually a little surprised that you'd done a little pivot in your acquisition strategy. So what's the next acquisition you're doing? And when I say pleasantly surprised in one respect, but I was surprised you went this direction. Yeah.
So our current deals that we're working on, are an 8-plex and a 12-plex in North Battleford, which for listeners that maybe don't know Saskatchewan, it's about 130 kilometers west of Saskatoon, just along Highway 16. So definitely a much smaller market. Population base is closer to that like 15,000 as opposed to Saskatoon, which is like 300,000.
Yeah.
So much smaller market.
And for some of those of you that maybe are Americans or whatever listening to this, is Saskatchewan, it's difficult to spell but easy to draw. Sorry, I digress.
Big rectangle.
Yeah, exactly. I have to be careful of our Saskatchewan humor a little bit. All right, so you pivoted into North Battleford. Okay.
Sorry, just to clarify, it's like not necessarily a pivot. I'm still full steam ahead in Saskatoon. I'm going to call this like a bolt on, right? Like Saskatoon is still a primary focus. The North Battleford plays are just ancillary to like complement the Saskatoon plays.
Brilliant. Absolutely. And what was your thought process of going into a smaller market, and what are you buying in North Battleford? Because I was surprised about the numbers and the price points that you were picking these up at.
Yeah. So, I mean, in a word, the reason is cash flow. I just went through some of the numbers in Saskatoon, and it is very difficult to get like a huge cash flow. I really feel like I'm active in the real estate community. I watch lots of different people's content. I think that cash flow is almost a myth on high levered product in large markets, right? Like there's a lot of misinformation, I think, out there that when you actually drill down and count every single expense, what your real cash flow is, when you're highly levered, it's pretty thin.
Yep.
Right. And so
go ahead. Sorry, go ahead.
So that's the entire reason of adding on a market like North Battleford, because we instantly shoot up to double digit cap rates. Yep. Right. So cash flow is just way higher.
Well, sorry for that myth. I have a couple unicorns in Edmonton, I guess. Then we are 100% financed, and we are generating cash flow out of my new turnkey properties, right? So, yeah. But don't get me wrong, on my older deferred maintenance townhomes, let's put it this way, every dollar that my new stuff makes, it goes into my older stuff. And so it is 100% not cash flowing. But the good news is if you start repositioning old, getting some new, scaling back, paying down, it's like a chess game, right? And this is an analogy I use all the time is, guys, are we playing checkers or are we playing chess? The ones that become a master chess player of the pieces on the board, no different than what you just described there, is you're playing a game of chess. Is in order to augment your Saskatoon properties, you're picking up some assets in North Battleford that are just pure cash flow plays, and you never know. They might go up in value significantly, but the intention is for cash flow. Okay. What's the numbers and what are the cash flows looking like, Mike?
Oh, so I don't have them all in front of me, but so our latest deals that we're purchasing,
yep.
We just bought a 12-plex. I'm just calculating quick. Like we're around that. That one was 55 a door. That was our highest purchase. We bought 2 8-plexes about a year or so ago, closer to 42,000 a door. The 8-plex that we currently have under contract is back at 40,000 a door.
So less than half of Saskatoon, in essence.
Yes, and for comparable rents, like relatively speaking. So I'll use the 1 8-plex that we have stabilized. We pick those up for about 42,000 a door. It's a mix of 1s and 2s. The 1s rent for about $750. The 2s rent for $850. So total building income $6,400. I'm sure most of your listeners have heard of like the 1% rule in real estate. In that North Battleford market, you're close to a 2%. You're like a 1.75. So a totally different sort of ratios.
Yeah, but you need to have those higher ratios in order for you to take on a little extra risk, because would it be considered a little more of a risky play?
Absolutely.
Yeah.
Yes. So you had already touched on it. The intention. The intention is strictly cash flow. I don't have aggressive models that these buildings are going to skyrocket in value, right? This is not an appreciation play. Like if they go up, and I hope they will because we bought them very well, but it's not like the roof is going to blow off these and they're going to double in value, right? So it's a cash flow play, and in these markets, different tenant profiles, different budgets that you need to put in place for maintenance and expenses and repairs and vacancies. So your expenses can be a bit higher too. So yes,
Yeah.
totally.
And then you had also
method.
mentioned on the Costco conversation in the parking lot that you guys actually had an opportunity to go a little bit higher levered, but you guys chose, you chose to go a little lower loan to value on them just to have that extra buffer.
Yeah, and again, this is because certainly things are starting to shift in my world. 3 years ago, peer growth, just push everything forward, accumulation. Now, as my portfolio grows and Rosalie and I's net worth grows, you have to look at it holistically. Like you can't just play offense, right? You have to play some defense. So we have Saskatoon properties at 85% loan to value. I want other properties at lower loan to values to balance that portfolio out. And the North Battleford market can support that, right? So we can go like 75% loan to value and even tighten the amortization, like 20 years amortization, and they still cash flow very well.
Yeah.
So it's a balancing game.
Wow. Mike, you probably noticed I was having a nice little smirk when you were talking there. It's just like you're talking like with all this wisdom here. It's like I'm talking to a person who's like 40, 50 years in the business here. Yeah, but you've, don't let your youthful good looks deceive you. How long have you been doing real estate for now, Mike?
I say 2012 because that's when we bought our first rental. We played in the fix and flip renovation games in 2010, but I don't really count that. So rentals since 2012.
So about a decade now, coming on pretty close, right?
Yeah.
Okay. And some killer insights. Like I see that there's a lot, you've now crossed over what I consider once that decade, you're now at the next table to sit at with the people that have the 15 and 20 year experience. You've now crossed over that because there's an awful lot of people that have, 5 or less years experience. There's a lot of people with the 7 or 8. But then once you cross over like that decade, you now can sit at the next table, if you will. You've earned the right to sit at the next table with some people, right?
Yeah. I have two comments on that. One is, for me, I feel like I get to come sit at the grown-ups table once I've experienced a full real estate cycle. And I haven't quite yet, because I would say I entered real estate during boom in Saskatoon, right? And I got to experience a lot of slump into recovery. But until we complete that cycle, I haven't lived through every phase. So I still am at the kids' table in that respect. And then number 2, what you said about having some wisdom, I'm kind of pulling from my veterinary days here. One thing that always blew my mind as a veterinarian. So in my vet career, I had a decade of experience there. I knew what I was doing when a case came through the door. And every once in a while, you'd get a client that comes in and you'd run all the tests and you'd give them the diagnosis and you'd give them the recommendation and they wouldn't do it. And you would sit there and you'd be like, I'm flabbergasted because you paid me to get 10 years of experience and like doctor level advice, and then you didn't take it. And that always has blown my mind. So the wisdom piece is just taking that, and following guys like you. And when you tell me something from 20 plus years of experience, I just listen to it.
Yeah.
I don't know better.
Well, let's put it this way. You're one of the most coachable people I know. There's a lot of people that, and sometimes, coachable, sometimes it's almost like not say a fight, but it's not an argument. It's just like, but here's the thing is part of my style is I would never tell you what you should do ever. I would actually rather you I would give you lots of questions to ask, lots of insight, lots of things to look at. But my goal out of all the work that we did was for you to make the decision what was right for you, because then you take responsibility and accountability to the decision, and the decision you make, you'll execute against more than me mandating something to you. Right.
Yeah,
So
absolutely.
that's just part of the style. And, and maybe now that we're, not weekly coaching anymore, I can tell you a little bit of some of the things I was doing with you after the fact now. But you probably got kind of the style of what we were doing. But my point I'm trying to say is you're just one of the most coachable people I've ever met. And you're like a dream to work with, because it was like, got it, done it, next week. Did it, didn't do it. Oh, why didn't you do it? Oh, I sucked. Okay, I'm going to get better. Got it, done it. Check. Didn't do this. I need a break, Russ. Leave me alone. Okay, no problem. Got it, done it. Right. It was a wonderful give and take relationship. So, but I think Mr. Bugg, you're like just taking things so far to the other level and extreme. So, okay, so I'm going to close the loop on North Battleford story. So you're buying them for like 40 to 50 to 60,000 a door. Rents are similar to Saskatoon. What kind of cash flow are you getting per door ballpark on the North Battleford properties?
So I'm going to have to extrapolate a little bit, because they all need to be stabilized, right? That's part of the value creation. The eightplex that we're going to be closing on will need renovations. The eightplexes that we had already bought were very under rented. So I don't know the exact number. It's going to be higher than the Saskatoon stuff for sure, like a couple hundred a door.
A better question would be, is after it's stabilized, when it's in the same comparison, it's going to be a couple hundred. Is that your best assessment?
Yeah, at least. And then in that market, I'm going to want to save more buffer for maintenance and vacancy, but it'll be around there.
Yeah. Nice. So essentially, you're just using North Battleford to augment the Saskatoon, but you're not stopping with what you're looking for in Saskatoon at the same time.
Yeah, exactly. And I'm starting to look at other markets too, other larger markets, like larger than Saskatoon, because that's really the game I want to be playing, right? Is larger, like buildings in larger markets. The North Battleford thing is that extra cash flow. And honestly, it even helps supplement like operations, right? Because you have all that cash flow spitting out. It's going to buy more properties in other markets.
Yep. Nice. Awesome. Okay. Now, Mike, I'm going to transition the conversation here a little bit into a couple other projects that you're doing that might not be on the surface. It might not be real estate, but it comes back to real estate. And you know what, Mike? Real estate investors sometimes have other interests other than just real estate investing. Did you know that?
They do?
Yes,
I didn't know that.
That's our secret, just as an FYI.
Okay.
So maybe a couple passion projects that you're doing. You've started a podcast with your good friend out of Calgary, Johnny. Everyone's going, the listeners going, oh, no, another real estate investing podcast. What is the name of this real estate investing podcast for me to get more real estate investing information? Talk to me about this podcast that you just launched with your good friend, Johnny.
Yeah. So it's called The Veterinary Project.
Mike, that's nothing to do with real estate, is it?
It's The Veterinary Project for real estate investors.
Okay, there. Thank you.
Yeah. Yeah. So nothing, again, on the surface, nothing to do with real estate. I will be throwing in little bits of real estate nuggets into that. But what The Veterinary Project is a podcast, and it's kind of the hub of a community for veterinarians and veterinary professionals. And the whole reason for this being is Russell, like my story, my journey, my transition. And as I was going through my career as a veterinarian, and I was buying real estate and I was working part-time and then ultimately not working as a veterinarian, and I would have conversations with other veterinarians, they would be like, I'm really struggling. How did you do that? Right? And at the time, I couldn't see it because I was struggling. But once I got out of it and the fog kind of lifted, it was this huge sort of desire to want to give back and help in that community. So really, the whole point of the podcast is all about veterinarians living intentional, purposeful lives. So we don't talk about medicine, we don't talk about surgery, we just talk about life as a veterinarian. And whatever that means, personal finance, mindset, soul set, personal development, real estate investing, anything to accomplish that goal.
Right. So it's kind of it's a fulfillment project, and it's a purpose. It's, a lot of, I've said this multiple times, is sometimes the biggest crisis we have is not pandemics and stuff like that. I think we have a crisis of purpose, that not enough people have a purpose of what will keep them up at night, get them up early in the morning, doing projects that just are purposeful projects to have that. But, here's the thing, we need to have some profit in order to have some purpose projects at the same time. So how long has it been since you launched the podcast, and what has been some of the results that have come from that to date?
Yeah, we're coming up on a year in July. So I think I don't know if we're on like episode 40-ish, give or take. So we do a weekly release. Jonathan and I purposefully set the intention when we started that we have no expectation of return of any sort for at least the first year. It was like, let's just give value. Let's have an impact on people. We're going to lift our head up in a year and see what kind of mess we've created and see where we can take it.
Yeah.
Out of that, just the coolest conversations you could ever imagine of people reaching out, some just reaching out to say, hey, thanks. This is having a huge impact on my life. But then also a lot of other people reaching out for opportunities like, hey, would you guys like to join us in this project? Or what do you think about this kind of business? So behind the scenes, sort of unintendedly, we're having some very cool conversations, and who knows where that'll go. Right now, we're just open to seeing where they lead.
Yeah. And you've had some invitations to speak at some forums, some financial forums, some education. You're coming out as a de facto knowledgeable influencer within the space of we do have lives outside of real estate investing in the space of veterinarians, right?
Yeah.
And I'm sorry for saying this, is one of your avatars for who your investment partners are people with veterinarian practices, correct? So it helps business out at the same time. But you're not attaching to that expectation, are you?
No attachment. And that was something, it kind of just sort of happens, right? Even when we were working together, my conversations around raising capital just seemed to be with veterinarians, because that's who I can relate to. We have affinity. They know me. Hopefully they like me and trust me. Otherwise we wouldn't be chatting. And so this is kind of just a way to magnify my message out to that audience that seems to be responding to it anyway. And like, the North Battleford deals that we're closing on, I had to raise capital for those. 100% of the funds is coming from the veterinary space.
Wow. So it's been, I know you didn't have the intention, but it's been okay for business at the same time of putting that out, correct?
Absolutely.
Yep. Yeah. So cool. So, but I was actually surprised to hear, this is not a pivot, but I was surprised, but I did know it a little bit when we were working, but you hadn't started it yet, that you actually have a book on the works too. Like what's the book about? And you're writing a book, and you're telling me that's quite the painful process a little bit.
Yes. Okay. So, a book, to be honest, is something I've always wanted to do. Like, I don't know when I first had the idea, I was like, man, it'd be really cool to write a book. And I had it to the side of me. I have a giant wall of ideas and brainstorming, and I have write a book on there. And I would stare at it. And then finally I was like, just do it. Like, how long are you going to stare at this thing for? So I was like, okay, I'm doing it. I started, we've come up to 1 year. So it's dragging a little longer than it should be. The book is for the veterinary community. Again, I'm not going to say the title. I'm going to save that. But basically the premise of it is my journey through my veterinary career, like over 10 years, and then drawing on the different challenges that veterinarians face, and then the personal development work that I've done that can help you navigate that challenge. And so it goes in a progression of what you'll experience as a new grad, and then once you've been out for a few years, and then once you've been out for like 8, 9, 10 years. So the first 2/3 is probably personal development as it relates to veterinarians. And then the last third shifts into finance and investing. And so that's where you're going to see some real estate investing come in for how veterinarians, and really I'm saying veterinarians, it applies to everyone, how they can use investing to just magnify their life, right? Like live more purposeful, live more intentional, and how when you get that finance piece nailed down, it's also going to improve all those other areas of your life. So that's kind of the flow of the book and what I'm trying to put out.
Okay. So good coach that I am, Michael. And I know how good you are at being coachable and being accountable. When is the book going to be finished? And when can we put in our calendars to sit there and say, Michael Bugg, what's the book, where it is, and when can I buy it?
Okay, live coaching.
I don't. Sorry. So it's easy. So guys, if you're watching or listening to this, it's really easy to be the person being the coach who's getting, oh, Mike, I'm going to hold you accountable to this and get this done. But I have no skin in the game. It's easy for me to do that, right? But I'm not the one doing the work. So, but I want to help you, Mike. If it needs to get over the goal line, do you need a little bit of some positive pressure of a deadline and everybody to mark in their calendars when they're going to send you a note and ask for if it's ready? Do you need that, or do I have to just back away?
No, it's all good. So this is, I'll keep this tight because I don't want to chew too much time rambling on it. So I do quarterly reviews, and we just finished Q1 2021. And I had this goal. I had to get my book to content edit, and I missed it. So I reevaluated, and I just this week set, like with the person I'm working with, when all the chapters will be done, to have the book to content edit. Now, so I don't have an exact date. For sure, 2021, fall 2021 seems reasonable. I still don't know all the steps because I'm working with a company that takes me through the process. So they're going to do the content edit and the like grammar edit and the help me with cover design and all that. And I don't know how long that takes. But for sure, fall 2021, some date in there.
Okay,
you can expect it.
With precision comes better results. Are we talking September, October, or November, or December?
Not September, harvest. Let's say
September.
I would like October. Let's go October.
October. Okay. What day in October?
Oh, man. I'm not looking at a calendar. Let's go the 21st.
Halloween? Why don't we do Halloween? 31st.
Sure.
What time?
And I'm leaving.
What time do I put in my calendar to call you?
Call me at 12 noon.
Noon. October 31st, Halloween 2021. And to be precise, it's going to be book is out of your hands. It's in final proofreading, or is it going to be going to publish?
At that point, I hope that it's published and like there's a copy I hope you have a signed copy waiting for pickup in your mailbox.
Okay. So is that the deliverable October 31st at noon? You're signing my copy.
Oh, absolutely. So yes. Yeah. The reason for my raise in inflection is if the book company I'm working with says, hey, you should really launch this on this date, I'll probably take their advice, but I want all of my work to be done by then.
Okay. Well, but here guys, so here's a teachable moment for everybody. It's okay if we come back and we communicate that the timelines are going to change, but the step number one is you get to make a really definitive stake in the ground of when it's going to be done. And then you're going to do everything you humanly possibly can do it, but you and I are going to have some conversations along the way. And I'm going to put in my calendar, October 31st at noon, check in with Mike. Where's my book? Yeah. And you go ahead.
Well, and you've probably noticed, Mondays with Mike have kind of dropped off. On my YXE Facebook page, I was doing weekly Mondays with Mike, and looking at just what was on my plate, it was too much. like with the podcast, trying to write a book, and I still have to keep buying real estate because that's how I drive income, drive net worth for our family. And so something had to start falling off. And to be honest, the message that I communicate on my Veterinary Project podcast and what I'm pouring into the book is more aligned with me. Like I love real estate, but what I really love about real estate is what it does for your life, right? And so my Mondays with Mike were sometimes more tactical tips, right? Like, oh, you should go clean your gutters because that's what you should do. And it's like, I like communicating more to the audience that wants to know what is real estate going to do for my life, not how do I do real estate.
Yep. And you know, sorry for coaching again, but maybe you're overthinking it, Mike. Maybe you're overthinking, and the reason I say that is because that's what I do. Is I overthink that I have to have such a grandiose message. Like, who would want to watch something if I just gave them an update? I'm telling you, I would love to watch a Monday with Mike, and if you're just telling us is how is the project in North Battleford going? What did you do in Hopkins? Here's my stock trading account, and here's the book writing process. If you just did those 4 things, and it was 7 minutes, and you didn't have to overthink it, Mike, I would love to see that, right? And, but remember, I'm not the one doing it. I'm not the one turning the phone on and doing that work. So see if it fits in with your life, because there are people in your life, if they're watching this and maybe they're seeing that, they go, yeah, I do miss Mondays with Mike.
Yeah. So, and sorry, I'm loving this conversation. We're going on so many tangents. Yep. I had a little breakthrough on that because I think I'm going to restart them on maybe more of a monthly basis. And then once the book is wrapped up, get back to my weekly. But I had a breakthrough around validation and exactly what you just said. You know, you're about to turn on the camera and you're in your head, you know, and you're like, well, does anyone even like that? Did it get any likes? Did it get any comments? And the breakthrough was kind of just honoring my message and trusting it, like that I'm coming from a very pure, intentional place and letting go of needing to see that feedback, right? And like that dopamine hit when someone likes your post, you know, just letting go of it and being true to my message.
Yep.
Because that gets in your head a lot.
Well, what did I hear the other day? I thought really resonated. I think it was a Joe Rogan. Now, don't get me wrong. I'm not comparing myself to Joe Rogan or anything, but sometimes we get in our head of when we post something or send out an email or put something out, and we're so worried about what people are going to comment, and maybe that somebody's going to have a negative comment and somebody's going to poo-poo on it and everybody's going to be upset with it. And somebody asked the question of Joe Rogan, what he does, and he says, my mandate is post and ghost. He goes, I post it and I don't look at it ever again. Now, I know when you have millions and millions of followers, you can't. But it was actually quite resonated as post and ghost in many respects, as you put it out there. And if somebody doesn't like it, no problem. It's on them, right? I'm just sharing my process and I'm sharing with what I've learned. I'm sharing a conversation I just had with somebody. If you don't like it, tune it out, right? No problem. Right.
I like that. Post and ghost.
All right. So, but at the same time, there are definitely some people that, you know, would consider that are very loyal people that want to see it, that post all the time. Definitely engage with them too. Like that is a wonderful thing. Now, interesting to note, Mike, we were having this conversation before we got started, and we were trying to pinpoint the date when you left your career. Do you remember, what date was it? It was July of 2018?
I believe it was July 17th, a Tuesday of 2018.
Okay. So you left a 10-year career as a doctor of veterinary medicine. And that is a real doctor. I'm sorry, I'm not trying to make fun or any of that kind of stuff, but it is definitely, you had to do some serious schooling and some serious training. And you have, in some cases, the responsibility of people's pets is almost as much responsibility as a family member. And I know in our case, our pet is a family member. But you hung up the stethoscope in that time frame. What would be and I know this could be an entire podcast episode in and of itself, but I bet there are some people that are listening here today or watching that are just going, I'm feeling the handcuffs. and I would like to potentially walk away. What was the process you went through in order to make this decision for yourself? And what could you offer to somebody else who's maybe thinking about this process as well?
Yeah, this is a deep question. Okay, let's try unpack it. There's going to be sort of two buckets, I think, here. I'm going to call one mindset, and I also want to offer just tactical, real actionable advice. The first in the mindset bucket around identity. And this is maybe magnified for a veterinarian, depends what career you're coming from, but your identity that you attach around the work that you do. So, I'm a veterinarian and everyone knew me as a veterinarian. I was on the radio in Saskatoon. I was in a cat calendar in Saskatoon. And it's like, that's what how they see you. I know. And it's like, Mike is a veterinarian and you are so attached to that. And so to let go of that, and separate and be like, no, I'm Mike. And I also do other things. I'm not just a veterinarian. And the approval of others around that, right? Like your parents, your friends, your family members, everyone in your circle, letting go of whether they like this decision or not.
Was the calendar, I can't get past the cat calendar. Was it Mr. Meow?
It was for charity. So it was very tasteful. It was for a cat rescue.
You had your shirt on, right?
Yeah, shirt was on.
Sorry. So that you lost me after cat calendar there, by the way, Mike.
I saw that.
But I 100% agree that, and I work with people all day long on making this transition, and identity is one of the hard things. Is what are the neighbors going to think if I'm at home? What is how are my kids going to view this when I'm sitting there and maybe I'm at home office and I'm not going to an office? That identity is a big one. What was kind of some of the process that you went through in order to really bust through that?
Well, I mean, I just have to be totally honest because that was my process. It was, things had to get fairly bad, right? And this is when I was working with you. This was when the moniker Miserable Mike was born, right? When Rosalie said to, Mike, you're not the happy-go-lucky guy that everyone knows you as. Like when you get home from work, you're Miserable Mike. So for me, the process was getting into that level where I was like, man, things have to change. Like, I just don't want to live the rest of my life this way. And so it was from pain, kind of from desperation for me, that was the motivation to move forward. And then the big hurdle I had to clear, other than identity, was confidence, right? And that is the biggest thing I would say by far, was having the confidence to just, decide. And honestly, once I decided, I remember we typed up the resignation letter and handed it in. It was just like, boom, all the weight dispersed because I had decided.
Well, and let's unpack that a little bit more. It's one of the things I told you at the time, there was going to be two things that were going to happen that were going to be the impetus for you to leave. It was either going to be inspiration or desperation. And which one did I tell you would probably be the one that would come?
I'm assuming you said desperation. But...
Yes, obviously, because that's where most people will make changes based upon the desperation as opposed to the inspiration. So if any of you are out there thinking about making a transition from a career or a job into wanting to, whether it's full-time in real estate or a YouTube star, a podcast star, all the podcasting enriches, if you will. I use that with a big smile on my face when I say that. Is typically, we all want the inspiration moment. We've got the plan. We know exactly what it is. We got the budget. And once we hit this level and we hit this level, then we're ready to rock and roll and kumbaya and everything's unicorns and butterfly farts, right? But normally that just doesn't happen. What was your desperation moment that happened, Mike? That was kind of that the next day we had a conversation and I made you write a resignation letter. What was that moment?
Yeah, the moment was a cat peeing on my face. That was the straw. Which is, it's kind of funny because as a veterinarian, you have all sorts of bodily fluids hit you on any given day. but it was just the straw that, broke the camel's back, I guess. The cat that came in and was just fractious and trying to rip everyone's face off. And I believe one of the girls I was working with kind of had a hold of him, and it turned, and I just got soaked. And cat pee is one of the worst things ever to be soaked in.
Mike, I'll myself and the listeners will take your word for that one. Okay, just as an FYI.
Yeah.
But let's continue that conversation. So obviously you had that moment, and it was just like, and we literally had a call the next day, and it was like, Mike, when is the day? And we wouldn't leave the conversation until you picked a day. And then you wrote a resignation letter, and then everything magically got better after that, did it not? Like, number one, your mindset, you got a little clearer, you felt the weight off your shoulders, but it actually didn't instantly get better, did it not?
No, it's a process, but it was very nice to decide. And I remember that coaching call vividly. I screenshotted it and I pinned it on my bulletin board because I was looking down, like doing whatever I was doing. And I looked up and you were screen sharing, and you had put 3 days, just random days. And you said, pick one. And I picked one. And then we were like, that is the day. And we're like, okay, perfect.
Yeah. So, you're blaming me, are you, for all this?
Thanking you.
Yeah, I'm teasing you. No, so, okay, so if somebody identity was one. You have to really go through that identity, and then maybe you have to have that moment where the proverbial straw that breaks the camel's back. Then what would you advise somebody as the next step after that? So you've kind of done identity, you've done some core deep work, you maybe done some soul work, maybe you've had a conversation with our good friend, Mr. Philip McKernan, maybe you've had a conversation with somebody who's been through, maybe reached out to Mike or myself or whatever. Then you had the moment, and then what was kind of the next step after that?
Yeah, so if we're shifting tactically, I would say this was a step I had done way before that, but I would access all the lines of credit you can. I wouldn't go and use them, but I would have access to them. I would start setting that up while in Canada you have T4 income. When you can walk into a bank with your T4 slips and be like, hey, I have a good, strong employment record. I'd like a line of credit. Get those opened up. Open some safety nets for yourself, because you'll just have them. Just know they're in place. So that would be like one of my first tactical tips. Next in line is, and sorry, this one maybe blends mindset and tactical. I would spend some time on your why. So when we're coming into real estate investing, you really need to know why you're doing it. Do you really love designing and fixing and flipping properties? Or are you doing it just straight for the income? And doing it for the income, it doesn't mean it's bad, but just know, like, is this a means to an end, or do I love doing this? And you may have to try a few things out to figure out what you want. The reason I'm saying that is I know that I don't love property management. And I know that someday I want to outsource it. If I buy properties that don't have enough like margin in them for me to bring on a property management company, I've trapped myself, right? Where I might be stuck managing that to keep the property afloat. So that's where, like, kind of begin with the end in mind, figure out your plan, figure out your why. And then I would have like an income plan. Like, how are you actually going to put groceries on the table? For me, I'm very fortunate. We opened this talking about Rosalie. The support system that I had to leave my job was phenomenal. Like, straight up, I would not have been able to do it when I did it without Rosalie.
Yeah. She's an amazing woman. So really, and I remember that as we actually just sat there and we almost Venn diagrammed it, where we were doing whiteboarding virtually, and we drew out all the different income sources, and we just really unpacked what is the opportunity. And we just did a deep dive brainstorm session, and then you crossed things out that just didn't resonate, didn't want to do, wanted to investigate, look at this. Then we gave you some time to really investigate looking into further some of these things. And then you came up with a plan. And also at the same time, a little bit of stock market trading and some option trading and things like that also came into your life as well for cash flow. But you knew your plan and you bought properties that supported your plan as opposed to taking you away from your plan. Would that be a fair assessment? Yeah. Well, it's funny. Absolutely. I had a conversation with a person last night, and he was talking about he was buying, condos in a certain marketplace. And after we got through it, and he told me his dream was to be able to walk the kids home from school and play soccer with the kids every day. And I said, tell me how those properties are performing. And they were like $600,000 condos that was getting maybe $1,800 rent. And I said, I don't even have to pull a calculator out. I know that at best, you're negative at best. And he goes, no, they're positive cash flow. And I go, well, I'm not going to argue, but I've been around the block a few times that those would be negative. Those would eat you alive over a course of time. And the only way he was making money on it was on the speculation of things. Mm-hmm. And that's fine. Don't get me wrong. Speculation is wonderful. But you can't count on it all the time. And I said, if you have a whole bunch of those $600,000 condos that are negative cash flow, is that getting you closer to spending every day with your kids, or is it moving you further away if they're negative cash flow? And he said, well, obviously it's moved me further away. And I said, well, maybe we need to adjust your pivot of what you're looking at the same time, because we need to have your investments support what you're doing, not take away with what you're doing, because you're going to have to work longer and harder, and you're never going to be able to get away from those handcuffs. Right?
Yeah, absolutely. And on that note, I mean, when you're starting out, maybe it's a bit different because you may have more time and less financial resources. But I know for me now, time is almost my number one metric. Like, what will this project cost me for my time? Because it's limited. And if I'm at a project, I'm not playing in the park with Riley. And it's exactly what you said. It's like, who do I want to be? And you have to make decisions that align with that. Yeah.
Now, holy moly, we could go on and on and on. I think there's another probably 4 or 5 podcasts that we can come from here as well. So Mike, appreciate the little update on what's going on in your world. We're just a little over an hour here. Guys, if you can do me a favor, if you got some value from this, which I know you did, you're listening to somebody who's just a shining star in the community, just somebody who's got a wisdom beyond his years, somebody who just is a leader amongst leaders. And even though he'll say he's not, he is. Okay. If you got some value, leave us some feedback, leave a review, but most importantly, share this message. Share it with somebody who maybe you're having a conversation with, and maybe they're feeling the shackles of the job, and maybe this will be a really good starting point of a conversation for them to have about listening to this and then taking the next deep dive. I also have coming up very shortly, both of a mutual friend of ours, Mr. Jamie Gruber, who just announced leaving a 21-year career in his 40s. And maybe that will resonate more with people. And I'm going to walk with Jamie, and I'm going to walk through the transition he went through to do something in his 40s of doing this. And he's been there 20 years, not just somebody in his 30s that's only been doing it for 10 years. Similar process, but when the runway gets a little shorter, the missteps get bigger, if you will, right? So long-winded way of saying, Mike, I'm honored to know you. I see the man who you become on a daily basis. I see the father who you become, and I see the husband who you are. And that's not just by accident. That's by you every single day, putting in the reps, doing the work. But it also is something that comes from within, and it comes out within you every time I get a chance to see you. And I'm honored to know you, my friend.
Thank you, Russell. I mean, likewise, I'm so happy. I think we met. Like the first time we met, I'd heard you on Podcast Forever, was in Edmonton at an event. Very honored to know you. Really happy I came up and talked to you. I was super nervous the first time that we met, but yeah.
And then your lovely wife handed me a beer, and you gave her, and you actually said, "How do you know he drinks beer? What are you doing handing him a beer?" What was my comment when you handed me the beer? Thank you very much.
To be honest, I don't. Oh,
Cheers.
Yeah.
No. So Mike, before we sign off here, do you have any final parting words, or maybe some final words of wisdom that you'd like to leave with some people that are listening to today's podcast, or maybe watching it on YouTube? Would you have any some final words that you'd like to leave?
Yeah, I guess, the thing that gets me fired up the most, and the message I want more people to hear is, we talked a lot about if you're feeling like you have those handcuffs on and you feeling like, there's more to life, you can do it. You can go after it, right? You can, even though it's going to be scary and there's going to be fear in the way, you can do it, right? And I want more people to step up and take control of their life and live intentionally and decide, what do I want? And then go after it, because it's totally possible. And it's very worth it. Once you get on the other side of it, it's amazing. And the process is worth it. Even though it's scary, when you look back on it, you'll be very thankful for all of it.
Wow. Hang on. You got a bomb drop there, Mike. There's the bomb. Mike, I forgot to hit the button the whole time. I was just sitting there and I go, you got a bomb drop there, by the way.
I'm sitting here and I'm like, I know he has the fancy technology to drop bombs, but I haven't even got one of them. What am I doing wrong?
It's 100% operator error. It's not because you weren't dropping a whole bunch of bombs. Hang on, you get a double one. Let's do one more. There you go. All right, guys. So I hope you guys got some fantastic value out of this. I know you did. I absolutely know you did. So if you are watching this on YouTube, make sure, you give a heart, you give some likes, you give some applause, all kind of stuff like that. And make sure you always comment, like, share, and subscribe. So if you are watching on YouTube, make sure you do all those steps for us. And with that being said, Mr. Michael Bugg, it is an honor to have this conversation with you. I can't wait to have the next one. Maybe there'll be a fourth one in the net. Maybe it'll be every quarter you and I check in and we have a conversation, and we'll check up from the neck up, and then we just record it for everybody for some value as well. Okay? Mike, have yourself a wonderful day. Well, I sure hope you enjoyed that video. 2 simple things to do from here. If you're interested in continuing your journey, interested in continuing to become a successful real estate investor, just below where you're watching this, there will be an opportunity for you to subscribe. And if you're interested in continuing your journey, there is a hand-selected video over here for you. It's been hand-selected for you to keep your journey going forward. Thank you very much.